This portion of This Week in Agribusiness is brought to you by Firestone Ag. The Firestone Ag Dealer Network offers you the support, inventory, and resources you need. Visit firestoneag.com to find your local certified dealer. It's time to turn our focus to the markets, and we saw the grain markets experience some pretty extreme volatility this past week between changing weather forecasts and the debt ceiling discussion in Washington, D.C. But for our market segment this week, we're going to recognize the start of June Dairy Month and talk dairy. Joining us is Ben Laine. He's the dairy analyst with Terrain. And Ben, thanks for joining us.
Thank you.
Dairy prices, Class 3 milk. Ben, I checked the futures market. It appears as though we are at the worst price since the COVID collapse in 2020. Fill us in on what's happened in the dairy market over the past 2 years.
Yeah, we're at a tough spot right now. Prices are way down. I think compared to this time last year, we're down 25% or so in that ballpark. It's gotten worse, I think, than a lot of people had expected in terms of milk price coming into this year, and it's stayed there for longer. So we're pushing into the midpoint of the year, and it's been a lot more pressure than we had expected. If we compare that to last year, we were setting record high prices, so Class 3 was breaking records. So a lot of this, it's painful just seeing how things looked compared to where they were last year. And if you compare it to the 5-year average, we're really fairly in line with reasonable milk prices. That's, of course, in a very different feed cost environment, everything, all the costs are more expensive this year. That's where a lot of the pressure is coming from, and just the pain of seeing how good it was last year compared to where we are now.
That's true. It's the reversal that's so staggering. And as you mentioned, that margin has been eroded as this milk price has come down. Ben, what's that done for milk production? Have we seen either the herd size shrink or production tail off?
We've seen production, it's increasing, but it's increasing at a pretty slow rate. So we're up marginally against last year, where it's pretty small gains. We're below our normal trend yield gains and cow number gains. But I think, still we're looking at, compared to 2 years ago, we're down. We're not making as much as we did at this point in 2021. So we're not gaining a whole lot in terms of milk production. There's some capacity limitations that's holding back the ability to expand. So production's not really growing that much. I think supply has been hanging in there, but in large part because the prices have come down. So I think because we're seeing lower prices, lower commodity prices, that's helped demand move, but it's been at that expense of lower prices.
Ben, the herd expansion, we're seeing record high prices for beef out there in the countryside. Would that be an incentive for a dairyman looking at these tight milk prices to perhaps liquidate some of the herd?
I think that's what we're seeing. We're seeing higher cull rates. I think we're going to continue to see that. That is incentivized with these higher cull values. We've seen some limitations in the ability to expand, so I think there's already been a little bit of inability to expand, but especially in this situation where we've pushed several months into this year with really difficult margins, I think that incentive is even strengthened to start looking at some culling and scaling back a little bit.
You've mentioned a few times the challenges to expansion. Ben, to your mind, what are those biggest ones that are holding up growth?
Well, a lot of it is just milk buyers that aren't able to take additional loads of milk. And I think that was a lot of what helped us out last year, hit some of these record high prices. We were seeing high prices, but no one was willing to take more milk. So in a normal year, you might see really high prices like that. Producers might go full steam ahead and really expand and grow and try and capture those prices. This time there was a lot of limitations in the ability to take more milk. So producers were kind of limited by those stops. There was also low heifer inventories. We've kind of gotten better at managing heifer inventories. They're expensive to feed, and there's a lot of uncertainty there. So there isn't just the pipeline of replacements that are waiting for those expansions. So it's kind of held us back a little bit and helped us support that milk price a bit.
Ben, looking out over the summer, is there hope in your mind that these Class 3 milk prices, this drop will reverse?
I'm optimistic that we're getting near the bottom here. I think over the next couple of months, these are going to be some of the lows for the year. So I'm hopeful that the second half of the year we'll start to see that pick up. And I think the catalyst for a lot of that is going to be some culling and some slower growth and maybe a slowdown in production. So it's really going to be more on the supply side that we're going to see some of that slowdown, unfortunately, but that should help to lift some of the prices.
All right, and that could impact demand as we go forward. Folks, stay with us. When we return, we'll get Ben's thoughts on what's coming with dairy demand.